Hey, what's going on, y'all? Hope everyone's having a fabulous day. If you haven't gotten a chance to subscribe to this channel, please do so. Want you to ring that notification bell. That way, when I drop videos, you'll be notified. Just want to let you guys know this is probably going to be the last video that I make from my truck for a while. Everybody knows there's a pandemic going around, and right now, due to the rates, it just seemed like freight has dried up. And so what I'm going to do is I'm going to go ahead and roll it to the house. Probably going to sit my truck for at least a month and you know, check back in 30 days to see where freight's looking. One of the things that I've always stressed is saving money, making sure that you're in a position to withstand an unprecedented time. If you guys been following my direction, if you guys been listening to Dave Ramsey, some of you that followed the steps are gonna be okay, right? I do think that it's gonna last, a little bit, but due to um, some help from the government, it looks like unemployment has a bonus of $600. This morning, if you guys haven't gotten a chance to check on your stimulus check, for example, some people got stimulus checks. If you didn't get a chance to get a stimulus check and you wanted to check um, where your payment is, if you go into my community, there's a little blog article, I believe it's from Life Hackers, that I ended up posting in my community. Um, you can click that link, read through the article, and see exactly how to check where your stimulus check is. This video is going to be a little bit long. Like I said, it's probably going to be my last video for the truck, from the truck for a while. I'm going to go home. I'm going to still make videos. If you guys haven't noticed, I haven't really been making a lot of videos. I've been working on my credit repair company. I've been working on my trucking company. But at this point in time, my focus is going to be strictly credit repair, just because the freight market is completely dry. So I'm probably going to get the truck started. I just got done doing a pre-trip on my truck. We're good to go. And I'm probably going to get started. I just want to get, the formalities out the way. And I think we did that so far. So let's talk about some of the things that, we all strive to get, which is better credit. That's why you guys are here. You guys didn't come here for entertainment. You guys came here to learn how to build better credit. And I've been making these videos now for about 2.5 years, 3 years. And what I want you guys to understand is there's a lot of new subscribers that come to my channel every month. I get anywhere from 300 to 400 new people every month. So if you've been with me for a long time and you see that I just keep regurgitating the same information over and over, there's a reason for it. Okay, just because you've been with me for a long time doesn't mean there's not people out there that need this information. A lot of you gotten a lot of success from some of the stuff that I said. So it's going to be a situation where, I still got to go back to the basics every now and again and make sure that everybody's doing the right thing, right? We're about to get started here, so I apologize, y'all. So the thing is, I get a lot of people that still to this day will call me up and they will ask me, "Hey, Kenny, so here's the situation. I got this card, this card, this card. I got the MyJewelers New Coast Direct. What do I do from here? Where do I go? How do I get to the next step? I'm already in the 620s. What does it take?" And what I want to do is I want to cover all of these things that, that's on my mind, right? And this is going to be a wrap up of the road of 2020, the first quarter of 2020. Like I said, uh, I'm not going to be on the road that much longer, so I just want to ramble. If you guys got a little bit of time, hopefully you guys stick around, because what I'm going to do is I'm going to walk you through all the steps from beginning to end. And I'm going to talk to you about building credit. I'm going to talk to you about business credit. I'm just going to talk to you guys about credit in general. This probably is going to be one of the longest videos I've done. I'm not going to worry about the time limit. If you guys watch this video and you're not really feeling it, I completely understand. But when I first started this channel, right? When I first started this channel, the reason why I started this channel was because I was in the credit repair space. And when I would see people getting items deleted, I wasn't seeing them get approved for loans. And I wanted to find a way that we can speed up the process of getting people approved for loans. So I said, okay, what really makes a FICO score go from, 400 to 600 or 600 to 700? What really drives FICO scores? And most of you that know me, once I come up with a question or something that I'm trying to figure out, I become obsessed. And I became obsessed with the topic of trying to figure out, what is it going to take, right? What is it going to take to get somebody from the 400s to the 700s? And that's all I really cared about. And I started seeing that the more that you balance your credit out, the better your FICO score is going to be. And what do I mean by balance your credit out? Meaning you're going out getting positive trade lines added to your credit report and deleting items. And a lot of times I would delete items from people's credit report, and I would notice their credit scores would go down. And that kind of defeats the purpose. See, a lot of people that get into the credit repair space, they get into the credit repair space because it's an industry to make money off. And if you get into the credit repair space because of money, that's great, but you're missing a huge part, because you're going to keep regurgitating, or I should say, you're going to keep parroting the steps that are in the industry, and you're not going to be very creative. And so I spent most of my time trying to figure out the code. I wanted to crack the code of better credit. And so what I did was I started looking and reading and messing with my own personal credit. This was many years ago. And I started playing with my personal credit, seeing, that if I got the right mix of credit, if I got revolving lines of credit, if I got installment loans, what really happened to my credit score, right? What was it that really boosted my credit score? And I started seeing revolving lines of credit, managing your credit cards, had the most impact on my credit report. I started doing more research, started attending credit repair events and doing different things, and nobody was talking about this. Everybody was talking about deleting items. You need to delete items off your credit report. You need to delete items off your credit report. And it felt icky. It didn't feel 100% authentic. And so what I did was I continued on building credit. And so I started, some of my clients, what I would do is I would make sure before they got started with me, like I do now, I started building their credit up before they went through credit repair. And I started seeing these huge impacts on their credit score before, that didn't really take that much long. That really didn't take long compared to the way that everybody was doing credit repair in the past. Meaning, just deleting items. Bring a client on, delete items off their credit report and say, okay, go get them, Tiger. And so as more and more that I started working with my clients, the more confident I became in my theory, the more educated I became in my theory, and the more people I helped, just to be plain and simple. And I started seeing that my system not only helped people in the 600s or the 400s, it helped people no matter what credit score you was in. Because if you have a high credit score, one of the things you want to do is you want to keep that high credit score, right? And so my theory that I had, it it became a true fact of how to handle credit. I developed it, I fine-tuned it, and over the years, I just put it in a situation where I know without a shadow of a doubt, if you're watching this channel, and you're looking to build your credit, no matter where you are, if you follow the steps that I'm about to give to you, you're going to be able to get yourself to a 700 FICO score. Now, there are laws and regulations that say, as a credit repair specialist or a credit repair organization, you cannot give guarantees, right? Here's my disclaimer. I don't care about the disclaimer. I don't care about your laws or anything, because I know without a shadow of a doubt these are the things that are required to get to the 700s. And it's not deleting items off your credit report. Now, if you are trying to get a mortgage, if you're trying to get an auto loan, or if you're trying to get a credit card, deleting items will absolutely help. But it's not the end all be all. And neither is just building credit. But I will say, if I had a choice of doing one or the other, meaning either deleting items off credit reports or building credit, I'm going to choose building credit first, and then I'm going to choose deleting items off credit reports. Now, I do own a credit repair company, right? So some of the stuff that I'm saying, you may be listening to it going, well, why would you say that? Like, if you're an entrepreneur or a business person, why would you say that? Because it's completely contradictory to my business, meaning there is no way for me to monetize how to teach you how to build credit. It would be in my best benefit to tell you guys the best way for you guys to build, to get a good FICO score is delete items off your credit report. But most of you know that's not my get down. I really truly believe that if you treat people right and you do them right, if I make sure that you get into the 700s, you're going to spread the word, and my community is going to grow. And it's going to grow organic. I never bought a YouTube subscriber. I never tried to buy somebody to give me a good compliment or anything like that. My channel, my community has grown organically just because of the methods that I teach and the way that I teach it. Just be authentic, tell people the truth, and let them decide for themselves what they want to do, right? And so here's the steps. All right, so I want you guys first to understand there's a difference between an installment loan and a revolving line of credit. Now, installment loans are really important, and revolving lines of credit is really important. The reason being is the FICO algorithm is predicated upon a mix of credit, right? It's about 15% of your FICO score. Makes up about 15% of your FICO score. And what they want to see is, do you have experience handling different types of credit? Not just one particular type of credit, meaning just credit cards, or not just installment loans, but do you have experience handling both types of credit trade lines? So an installment loan is any loan that's given to you where the payment is fixed, and when you're done making that last payment, you are divorced from that financial institution. Meaning, if you have a personal loan, once you're done paying off a personal loan, let's say you go to a bank, that personal loan could be for $1,000. Once you make that last payment, you are divorced from that financial institution. You have no more obligation to make any more payments, and in fact, you can't use that line anymore. That's done. That loan is over with. So those are like auto loans, Not mortgages as much. I kind of put mortgages in their own separate category, but auto loans, personal loans, or anything like that, right? So those are installment loans. Now, installment loans, I want you guys to understand, they don't have the largest impact on your credit score, but it is important to have an installment loan, at least one installment loan on your credit report. Okay, now the revolving lines of credit, which is anything like a credit card or something like that, those are going to have the largest impact on your credit score. These are things like credit cards, lines of credit. Um, these revolving lines of credit is anything where your payment is not a fixed payment. It fluctuates. It's a flexible payment depending on the balance. So you guys know how you have a credit card and you might have a monthly payment of $35, but the more you spend on your credit card, the higher the balance is going to be. So the monthly payment is flexible. So that is called a revolving line of credit. Now, what I've learned is revolving lines of credit have more of an impact on your credit score than any other type of loan on your credit or any other type of trade line other than a mortgage. A mortgage is huge to your credit score, but a revolving line of credit, that is probably 50% of the battle, right? Of your FICO score, maybe over 50%. I would probably say it's probably close to 65%. If you manage revolving lines of credit, that is going to be the key factor to getting to the 700s. If you just do this properly and you're in the 400s, you can get to the 600s very, very easily. Okay? Now, what you want to do is you want to have at least 2 secured or unsecured credit cards. Why do you want to do this? There's 2 things. Now, when you go out and you get you 2 secured or unsecured credit cards, what's going to happen is you're going to not only start building your credit, but you're going to start teaching yourself discipline on how to use credit cards. And that's huge. You're going to start out with a small balance, and you're going to teach yourself the difference between a 30% utilization rate that everybody talks about. Everybody says, hey, you want to have a 30% utilization rate. That is absolutely false. Okay? What you're trying to do is maximize your credit score. And so what we found out in the credit world is that people with 700 and above, right? Prime credit scores, 700 and above, only use 2 to 7% of their utilization rate on their credit cards, on their revolving lines of credit. So what you want to do is you just want to mimic the blueprint. You don't have to come up with your own theory. See what those that are successful already and mimic that. And we found out that people with high credit scores use anywhere from 2 to 7%. Once you start going above 10%, you're going to start seeing a more of an impact negatively on your credit score. So if you go all the way to 30%, just think about all the points lost just because people are telling you it's okay to use 30% or lower. It's not. It's not okay to use more than 10%. If you start using more than 10% of your credit cards or your revolving lines of credit, you are now in the danger zone. Just letting you know. So never use over 10% on your credit cards. When you get your 2 secure credit cards and you're building your credit up and you're teaching yourself discipline, what you want to do is you want to get secure credit cards that are going to graduate. Now, if you go in the description, you're like, well, I don't even understand which cards graduate the fastest. In the description of this video, if you go down there, I created a sheet where I went over the top secure credit cards, when they graduate, when they don't graduate, and you can download that sheet. You don't have to put in your email address or anything like that. It's a Google sheet where I compared all the secure credit cards, and you can get a glimpse of what secure credit cards are going to be best for you. Like if you're just starting out, you have like a five, anything under a 550, chances are you're not going to get approved for an unsecured credit card. So you're going to have to get a secure credit card. And so what I did was I created a Google sheet where you can look at the top secure credit cards, and you could pick the one that best suits your needs. Now, these are some of the secure credit cards that I really like. The Discover It. Now, the Discover It is probably the only secure credit card that I know of that gives you a cashback reward. Now, it's probably one of the hardest secure credit cards to get approved for, but if you are just starting out and you want to build your credit, if you can get this card, get it. It's that simple. Now, you're probably going to have to be in the 620 range to get this secure credit card, but it's a great secure credit card to get started with. All right, like I said, it's a cashback secure credit card, and what it's going to do, it's going to graduate in about 10 to 12 months. And when I say graduate, what I mean by that is it's going to give you your credit or your money back, and then it's going to become an unsecured credit card. So any secure credit card that graduates is typically one of your better secure credit cards. A Capital One is one of the easier secure credit cards to get approved for. The reason why I like this Capital One secure credit card is because Capital One will give you an increase 5 months after you make your payments on time. So not only is it a great secure credit card, but it's a great financial institution because they have so many different types of credit cards that you can, once you get into the unsecured range, that you can apply for. They got platinum cards and all different types of cards with different reward structures. So if you're looking to start using your cards for reward points, Capital One is a great family to be a part of. And so what you want to do is you want to start with those secure credit cards that you're going to be with for a very, very long time. 10, 20, 30 years from now. So most of you know I'm not a real big fan of the Credit One or the Merrick Bank or the First Progress because it's very limited. You don't have a big family that you can grow with, like a Discover It or a Capital One. Capital One, you can get auto loans with Capital One, and you can establish a relationship with Capital One. Now, another great secure credit card, if you guys are part of the military or if you have a family member that's part of the military, chances are they can get you a part of Navy Federal Credit Union. Love that secure credit card. It's a great secure credit card to have. These secure credit cards graduate, and you are looking to be with these financial institutions for years, not just get the card, get your credit right, and then cancel the card. You do not want to put yourself in that situation. Most of you know I got a Credit One credit card, and it was the worst credit card that I ever had, and I will never recommend that card to anyone. I'm not defaming them. There's a reason why I feel that way. It's not I don't want to get sued by Credit One, but the reason why I don't like that card is because soon as you use the card, you are charged interest. Okay, and a lot of people don't know that. Whereas you go to a Discover It, you use the card and you pay it off, you're not going to get charged interest if you pay it off before the due date. Where the Credit One secure credit card of any of the Credit One cards, as soon as you use the card, you are charged interest at that point. And that is something that I'm really not a big fan of. That's the only reason why I don't like that card. So that's something to be aware of those of you that have the Credit One card and you guys are thinking about using that card, if you got that card and you're wondering, should you use the Credit One card or should you use your Capital One secure credit card? I would use the Capital One. If you have the Credit One and you don't want to cancel it, you don't use that card because you're going to be charged interest as soon as you use it. You probably think, well, if I pay it off before the due date, I won't get charged. That is not true. That is one of the only secure credit, or that is one of the only cards that I know that have that pay structure. I don't know of any other card that has that same type of pay structure. So getting secure credit cards are key to building your credit score, your FICO score. Now, I want you to understand there's several different type of FICO models. So in certain models, your credit scores are going to go up faster than others. All right, your credit scores are going to be affected differently. So what I like to say, there's a Vantage 3.0 score, FICO score, which is you have the FICO 8, FICO 9, and just recently FICO 10 just came out. And what you want to do is you want to look at your FICO scores, you want to look at your Vantage scores, and make sure that you are optimizing your credit score. You don't want to give any points away if you do not have to. And some of you have, 30 collections on your credit report and you're wondering, well, should I start deleting items before I do this? Absolutely not. This is the very first step to building credit and getting your credit right. Those of you saying, hey, Ken, I want to get myself in a position to buy a home in 2 years. This is the very first step that you take when you're trying to build your credit. And you don't worry about your collections as of yet. What you want to do is you want to put yourself in a position that while you're getting items deleted off your credit report, your scores are jumping. I just had a client just recently, I think it was day before yesterday, I looked at his credit score and he had a jump of 100 points, right? And I could pat myself on the back and say, well, that was my work from deleting items off his credit report. But it wasn't. It was for the simple fact that I had him put himself in a position of getting the proper credit before we even started working on his credit reports. That is the most efficient and effective way to get somebody to the 700s with a very expedited way, right? And that's what we're all trying to chase. We all want to put ourselves in a position to where we can walk into financial institutions and get approved for loans. That's what we're trying to do. We're not really trying to build our FICO scores up just for the sake of building them up. There are things that we're trying to accomplish in life. And some of those things we're going to have to finance. And when we finance them, we want the best financing options possible. So it's not just getting approved, it's getting approved with the best financing options possible, right, for our given situation. And what I'm here to do is help you learn how to get into those positions. And it's not about just deleting items. Now, once you get those, you get your secure credit cards, you get at least 2 secure credit cards. What's the next step? Now, I made a video on SelfLender and I made a video on, I believe it was CreditStrong. Now, these 2 companies, what you can do is you can sign up with these companies, and what they will do is they will extend you a loan and you make monthly payments on them. I'm going to put the videos in the description of the link so that you can go and look at these videos. And once you look at these videos, you'll get an idea how this works. They'll give you a loan and you pay them over time. And once you pay that loan off, right, because they're going to put your money into a CD. Once you pay that loan off, you are going to get that money, right? And they're going to charge you a little bit of interest, but that's the price we have to pay to get started building credit. And so, you can go with CreditStrong, you could go with SelfLender. There are going to be links for you to sign up with these companies, but some of them, all these links that I'm telling you, some of them may be affiliate links, some of them may not. So whether you use the links or not, I really don't care. What I want you guys to do is just trust me, take the steps, and you're going to be okay. So you have an installment loan that you can get put on your credit report. Now, some of you that don't want to go through SelfLender, I got a call yesterday that, from a gentleman that was thinking about getting SelfLender. He went on to Google SelfLender and he read some bad reviews. He didn't feel comfortable. So I told him, I said, okay, well, if you don't feel comfortable with either one of these two companies, here's what you can do. You can go to your local community bank, tell them you want a secured loan, and do the same structure with your community bank, your community credit union or local community bank. I don't recommend the Chases or Wells Fargo's or large banks or anything like that. Establish a relationship with your small community bank, and from that point forward, you can use that community bank as a resource. Trust me, they want your business rather than, the Chases, Wells Fargo. They can care less. You're just going to be a number to them. But your community bank is going to treat you like a business partner, and that's how they're going to view you. And so you can go to your community bank, and if you want to get $1,000 secured loan, you give them $1,000. They're going to take that money, put it in a CD, and then in the very next 5 minutes or so after you fill out your application and everything, they're going to give you your $1,000 for your loan, and then you make payments on your loan, right? And they're using your $1,000 as collateral. So you can set up the same system with your community bank. You do not have to use SelfLender or CreditStrong. What you can do is do it with your local community bank, right? But if you want to get the idea how these financial institutions work, I'm gonna leave descriptions of. I'm gonna leave a description to the title, or go in the description and grab the videos, and you can check them out, in your own spare time. So now you have 2 secured credit cards and you have an installment loan. What you want to do is you want to go out, you want to get 2 more revolving lines of credit. And these revolving lines of credit is going to be MyJewelers and New Coast Direct. These 2 trade lines are going to be the only trade lines that I recommend because they give you the highest limit. There are going to be some of you that, well, what about Fingerhut? What about Hut and Chase? What about Ox Publishing? What about this company? What about that company? Don't worry about those companies because they're not going to give you a high enough limit to make a difference, right? And when you're talking about a $5,000 trade line, that's huge because what this trade line is going to show is that not only do you have experience now dealing with a mix of credit, you have an experience dealing with a high limit credit as well. So these 2 things are going to help you build your credit up. It's MyJewelers and New Coast Direct. The links are going to be in the description, okay? So once you get these 5 items on your credit report, you are going to start seeing your credit take a hit initially, right? I want you to understand. I had a client call me the other day. He said, yeah, I lost 42 points. Okay, that's okay, right? Because we're just building our credit. We have to start somewhere. This is just the process, okay? You're going to take a hit. Once you start seeing your credit scores go up, understand they're going to continuously go up as long as you manage your credit right, meaning keep your utilization rate under 10%. Meaning if you have a credit card of $1,000, you do not want to spend more than $100. If you got a $250 secure credit card, you do not want to spend more than $25. Never go over 10% on any of your credit cards, especially when you first start building your credit, right? You want to manage your credit properly, and you want to show these financial institutions that you have experience with dealing with credit. Another secure credit card that I forgot to mention that is one of my favorites is the State Department Federal Credit Union. Now, you do have to join the American Consumer Council. It's like a $15 membership, a lifetime membership that you have to pay. Once you pay that membership, you are able to get to be a part of this, credit union. The reason why I like this secure credit card is because it graduates, but it's probably going to be the lowest interest secure credit card that you get. I believe it's anywhere from 7 to 10%, 7 to 13%. I'm not really sure exactly what it is, but it's a very low uh, interest secure credit card that you can get. Right? That's just a little caveat or another tip I just wanted to throw out. Like I said, I'm just going to give you guys the nuts and bolts because I really want you guys to understand that this method is tried and true no matter where you're starting out. If you just if you just got discharged from a bankruptcy, you're getting ready to go into a bankruptcy or something like that, if you watch this video and you follow these steps, you're going to be okay. How do I know? Because these are the same exact steps that I did when I got my discharge for my bankruptcy October 2017, I think it was. So when you get your discharge, these are the same steps I want you to take to start building your credit. Now, once you get yourself into a situation where you have these 5 trade lines on your credit report, what do? You apply for credit sparingly, only with the financial institutions that you're going to do business with for the rest of your life. Meaning Discover It, Navy Federal Credit Union, Capital One, Chase, American Express, financial institutions that you're going to be with the rest of your life. Are you going to apply for the Home Depot card? If it's something that's going to be applicable to your business, okay, great. But if it's something where you're just getting it to just get credit, like I made a video talking about, I got people talking about getting a Victoria's Secret credit cards, and that's not what we're doing here, okay? I got people that got 30 credit cards and they're, flashing 30 credit. I mean, you almost got a deck of cards. What are we doing, right? In personal credit, what are we doing? You don't need all that personal credit. There's going to be a time and a way to build your credit, but it's not going to be personal credit. It's going to be business credit. And so what you're trying to do is, once you get the foundation, that's what I call this, you're going to apply for a credit card every 6 to 8 months, right? That's what you're doing. Every 6 to 8 months, you're applying for credit. That way you're not getting a whole bunch of inquiries on your credit report. Some of you don't understand that there's a lot of algorithms. Even at a 780 FICO score, you could be declined for credit if you have too many inquiries. Okay, so you want to apply for credit very, very sparingly. And that's the key to this game. Very, very sparingly. You don't have to go out and get, every credit card just because you got Credit Karma telling you you can get approved for a credit card. Apply for credit every 6 to 8 months and make sure that every quarter you're calling on your credit cards that you already have and you're trying to get limit increases. If I have a choice of a new credit card or a limit increase, chances are I'm going to go with the limit increase before I get a new credit card. Your limit increases are vital to your credit profile. Alright, now what you're trying to do is get every low limit credit card that graduated into a high limit unsecured credit card. That's all you're trying to do. And so every quarter you're calling them up, talking to your financial institutions, telling them, hey, look, is it possible to get a limit increase? And chances are, if you're managing your credit properly, they will give you one. Right? They may give you a little fight, but that's okay. That's what you're trying to do. You're trying to get limit increases. But you got your foundation together and you're building your credit. What do you do from that point? You want to get to about the 680 to the 700 range. And so once you have your foundation together, that's when you want to start deleting items off your credit report. That's when you start looking at credit repair companies. Okay, which credit repair company do I want to go with? There are going to be some large institutions that, I'm trying to stay politically correct, that will take your money. Will they provide the best service? Um, of my opinion, I believe a smaller mom and pop credit repair company will give you a better service than a larger credit repair company. All right, now they're going to the larger one is going to take your money. I made a video on one of the largest credit repair companies in the country, and uh, it's just of my opinion that there's not enough education. Like what I'm doing right now, this is what we're supposed to be doing as credit repair specialists. We're supposed to be teaching you credit, not just fixing your credit, but teaching you how to use your credit. And those financial institutions did not do that, right? And that was my problem with those financial institutions. Now, just a quick note, just letting you guys know, I do own a credit repair company. Now, tell you a little bit about how my credit repair company differs from everybody else's credit repair company. We focus on education, we focus on maximizing your credit score, and we focus on making sure that you can get approved for loans. I have a wealth of knowledge in not just credit, personal credit, but also business credit. I don't like to toot my horn on business credit or anything like that, just because I think that the market that I focus on is personal credit. People of business credit that focus on business credit, they have their YouTube channels. But my clients that come to me that want help with their business credit, I can help them. Now, I'm in the process. I'm going home. Like I told you guys, I'm going home. I'm going to be putting a business credit course together. I'm going to be putting a credit repair course together. That way, you guys have something that you can, reference when you're trying to build your credit up. And I can always give you guys something to where you guys can use tools to help you build your credit, and always have a guide, without having to call me up asking me, hey Kim, what secure credit card should I apply for? So once you get to about the 680 range, okay, I'm starting to get dry, y'all. Once you get about the 680 range, what you want to do is you want to start looking at becoming an entrepreneur, a business. And what that requires is you want to start getting a federal tax ID. You want to start thinking about a type of business that you want to start, even if it's like, Kenny Incorporated. Whatever it is, you want to start looking to get into business, and you want to get a federal tax ID, and you want to start applying for business credit cards. I want you to understand, Capital One has a credit card called the Sparks Business Card. That is probably the very first business credit card that I would apply for in my business name. My federal tax ID. Once you get your federal tax ID number from the IRS.gov site, it could be, you're a sole proprietor. It's nothing. It takes you about 2 minutes to get a federal tax ID number and consider yourself a sole proprietor. Now, you may have to do taxes on that business depending on if you're generating income or not. I'm not a CPA, so you do want to talk to your CPA about the new business that you're about to start. But understand, once you become a sole proprietor, you have a lot of benefits, meaning you're going to be able to write off a lot of things that are business related, like cell phones, a portion of your internet, a portion of your travel expenses like fuel and stuff like that, or gas. You're going to be able to write these things off of your W-2 income. So having a business is very, very beneficial to your financial portfolio. But the reason why business credit cards are much, much more better than personal credit cards, and you're still going to get an inquiry on your credit report when you try and get these cards. But the reason why these cards are so great is because when you use them, they don't affect your utilization rate, right? When you use your personal credit for anything, it affects your personal credit. I mean, your utilization rate. And so if you are in the habit of using credit cards, what you want to do is I would rather you get business credit cards than use personal credit cards. Now, these are the steps that I would use, or that I would do to start establishing my credit. Every 6 to 8 months, I would apply for a personal credit card or business credit card, right? And like I said, I would do it sparingly. I would not rack up a whole bunch of inquiries or anything like that. I would just take my time, build my credit up the right way. Now, how long is all this going to take in order for you to get where you need to get? Right? It's going to take you anywhere from a year to 24 months to get you to a high 600, possibly a low 700, depending on where you start. It's a very broad brush. And so if you are just doing these steps, you are going to be successful. Now, like I said, I do have a credit repair company. I do believe that my credit repair company is one of the top because just the way that we do things. I don't want to sell my business. I don't want this to be a sales pitch or anything like that. If you guys want a credit repair company to work with you, we're here. If not, you can go to any other credit repair company out there. Just do your vetting process and make sure that you pick the right credit repair company. I got a ton of videos on how to pick up a proper credit repair company, right? And there are certain things that you want to look at. And I don't want to make this in this video because I'm already running long and I'm running thirsty, okay? So I really hope this video helps you. If you just came to this channel, subscribe to this channel. I'm going to teach you on how to build credit. If you get a chance to download my book, it's in the description of this video. Download the book. It's called Credit Anatomy. It's going to teach you on how to build credit. I want you guys to really start focusing on ways to build credit so that you know when you walk into a financial institution, you're not worried about getting approved. You're worrying about negotiating terms. And if I could just get you to transition your mind into thinking this way, you are going to be financially secure just for the simple fact of the way that you're going into a lot of your financial terms. You're not going to go to car dealerships and get your credit blasted by automotive dealerships. You're going to walk into your, Navy Federal Credit Union and ask them for an auto loan, and they're going to give you a check, and then you're going to go car shopping. These are the ways that the wealthy do business, right? You're not going to see somebody that's wealthy going into an auto dealership, getting financing through the auto dealership. Chances are they're going to have their financing together already. They're going to have their mortgage broker already when they're going to look for a house. And I'm just trying to get you guys to start thinking differently before, it gets too late. We're in a very, very dangerous time right now. If you guys have seen already, Chase have made it a little stricter to become homeowners. I believe it used to be a 580 FICO score. Now they changed it to a 680 FICO score. And you're going to start seeing these requirements change. The more and more we become into a financial crisis, the more and more you start seeing bubbles burst and financial institutions going bankrupt, the more you're going to start seeing these credit requirements becoming stricter. And so regardless of where you're at and regardless of what you're trying to do, if you get a stimulus check and you're wondering, what should I do with the stimulus check? I don't want to spend my stimulus check. What my 2 cents is, invest it in yourself. Invest it in your credit. It's going to pay dividends for the rest of your life. And I know this without a shadow of a doubt, that it's going to help you in your financial journey going forward. Going in 50 minutes on this video. I hope this video helps you on your financial journey. You guys have a blessed day. Talk to you later. Catch you on the next one. Bye-bye.